Hello, everyone, and welcome to today's session on the CARES Act, specifically the Paycheck Protection Program portion of it. I'm Jeff Rich, CEO of HSA Insurance. HSA Insurance is a Massachusetts-based company that provides an online benefits marketplace, or private exchange as it's sometimes called, providing individual and small group benefits such as health, dental, life, and vision through a variety of carriers. I'd like to introduce today's presenter. With us is Chris Condalucci. Chris is principal and sole shareholder of CC Law and Policy, a legal and policy practice that focuses on the Patient Protection and Affordable Care Act and its impact on stakeholders ranging from employers and third-party administrators to health IT companies and hospital health systems. Prior to forming CC Law and Policy, Chris served as Tax and Benefits Counsel to the U.S. Senate Finance Committee. During his time in Congress, Chris participated in the development of portions of the ACA, including the exchanges, the state insurance market reforms, and all the taxes enacted under the law. Based on his experience as an employee benefits attorney, Chris possesses a unique level of expertise on matters relating to tax law, ERISA, and the ACA. I've personally worked with Chris for a number of years now and have a great deal of respect for him and what he brings to the small business community, and I know you're going to get a lot of value out of this webinar. A recorded version of this webinar will be available and sent to you via email shortly after the conclusion. So without further ado, I'll hand over the reins to Chris.
Thanks, Jeff. Appreciate it. Thanks for the introduction, and thanks for everybody for joining today. I know this is a very important topics, plural, for most folks on the phone here. There's been a lot of information over the past, let's say, 2 weeks now. I hope that the information that I provide here not only affirms what you believe you know about this program based on your own reading up, summaries, comments, questions, answers that you've received from others, let's say your accountant, your friends, whatever you read in the media. Again, I hope I can affirm some of that stuff and the understanding. And I hope I can also maybe clarify some points where there still remains some confusion. The federal government has recognized that there continues to be confusion. And so I'd say over the past week, dating back till about Saturday, this past Saturday, the Small Business Administration, the Treasury Department, et cetera, has been issuing various pieces of clarifying guidance, of which, again, I will build into what we talk about today. So I have a lot of information to go through. Again, some of it might be repetitive that you may already know, but I'm still going to go over it. I hope that some of the information that I do go over that is either new or just that provides a finer point on things is helpful to you from a clarifying perspective. Then we're going to open it up for questions. I've received a number of questions. I know Jeff and Chris Delaney on the phone with NFP. Hal has been with HSA Insurance, has received a lot of questions, and I'm sure we'll get some additional ones. So that's all housekeeping. So let me go to the first slide here just to kick it off. Really just to really back up and understand what the underlying intent of these loan programs, and again, based on the first title of the slide of this presentation, is I'm going to focus on what I think or what we think are the most important loan programs out there. There are other loan programs either through the SBA or through the emergency relief that's been provided, but we're going to focus on two, and that's going to be the Paycheck Protection Program and the loan forgiveness. So again, what's the underlying intent of the Paycheck Protection Program and really the loan forgiveness program, because it's specifically tied to the Paycheck Protection Program, and it is so you rehire your employees that you might have recently laid off. The federal government understands, or Congress understood, that not that they were late in the game reacting to this, but at the same time, late in the game reacting to this. There were a lot of states that were, shuttering businesses shortly after, let's say, the exercise in Congress as it relates to the Paycheck Protection Program and others when it was being under consideration. The White House, the president came out and started shuttering. And so this program came a little late. But the federal government is now saying, look, we'd love for you to rehire the people who you have laid off, and they hope that this amount of money does it. We'll talk a little bit later on whether it does the trick or doesn't do the trick, but that's the underlying intent. In addition, is just so you can stay in business. You know, if you got no one, if you got no customers, you're not making any revenue. So to an extent, is there a way for you guys to stay in business as a result of these loans? That's the underlying intent. So go to the next slide for me, Chris, please. Now I'm just going to tick through just some stuff that you might already know, but I still want to go over it, and I'll go over quickly because I think you know all of it. But first, you know, who is eligible? Well, just to confirm for everybody again, it's businesses with 500 or fewer employees. Now, there are some exceptions to the rule if you're in the food industry and or if you're a franchise owner, but I'm going to assume that most people on the phone here are either self-employed or they're small employers, and therefore these various exceptions that I mentioned aren't applicable, so I'm not going to go into too much detail. If you have questions on it, let me know. Now, one important thing that I did want to talk about, which you see in this sub-bullet, is if you are a small business but you own multiple businesses, there are what's called the affiliation rules, and the general rule under the affiliation rules is that you must aggregate your employees and count them together. So the employees of all these multiple businesses, count them together to determine your size. Now, there's still some nuances to how you count, how you aggregate, what the ownership might be, what if there's common management. I'm not going to go into detail on that here, but know that there are some details that are related to this kind of affiliation aggregation rule, that if you fall into this scenario where you have multiple businesses, you should look a little bit closer into it. I'm happy to answer any questions as it relates to it. Sticking with this slide, nonprofit 501c3s and C19s are eligible, and that means that if you're a C4, a C5, a C6, any other C other than 3 or 19, you are not eligible. So I've gotten some questions on that, so hopefully that clears that. Self-employed individuals are indeed eligible, and we're going to talk more about self-employed. Go ahead and go to the next slide for me, please. So here's what I think is the most important pieces of information that folks on the phone probably want to know, and it's just logical that everybody wants to know this. I would want to know this, and I do want to know this just personally, speaking as a self-employed person. What is the maximum loan for businesses? Now, I'm also going to say to my self-employed folks, wait for about 2 or 3 slides, because right now I'm going to focus on businesses that have at least one common law employee, and it must be a common law W-2 employee. So if you are a business on the phone here, listen to me now, because we're going to go through about 3 slides that are applicable to you specifically. Self-employed, I want you to pay attention, but you know, obviously to an extent, I'm focusing on businesses, not you just yet. So for businesses, if you were operating during 2019, the maximum amount of your loan is your average monthly payroll cost for 2019 times 2.5. That's it. So you'll obviously need your payroll records for 2019 for purposes of determining your loan. Now, I'm going to talk about payroll costs. I'm going to talk about the calculation in a second, but here's the general rule. Your average monthly payroll cost for 2019 times 2.5. Probably already knew that. Anyway, next slide, please. If you happen to be a business, again, sticking with business, who was not in operation during 2019, but you were in operation, you know, hopefully by January 1, 2020, because that's the calculation that you can use. You can look at your monthly payroll cost from January 1, 2020 to February 29. You multiply that times 2.5, and you get your maximum loan amount. So again, you'll need your payroll records. So go to the next slide for me, please. So what are payroll costs? This has been the biggest source or biggest area of confusion, and there continues to be confusion, of which I hope to clarify some of that confusion today. So just plain black and white, what are your payroll costs? Salary, wages, commissions paid to employees. Again, W-2 employees. And that compensation is limited, or that amount is limited to the first 100,000 that you've paid to each employee. There's been confusion of whether you exclude employees that you pay more than 100,000 to. That's not the case here. You include them. You just haircut whatever amount is above 100,000. You ignore it. So all of your common law W-2 employees that you pay, you count that in payroll costs. You limit it to $100,000, and we'll touch on this in the next slide, but don't go there yet, Chris. So other payroll costs, cash tip equivalents, if that's applicable here, your employer and employee contributions for health benefits. There's been a lot of question on this health benefit aspect of payroll costs because the language is not clear at all, where it says payments for the provision of group health benefits, including premiums. I interpret that as simply more or less relating to premiums. I can maybe make an argument for adding administrative costs to that. And when it comes to the premiums, there is an employer portion of the premium as there is an employee portion of the premium. The IRS treats the employee portion of the premium like an employer contribution. As we all know, the employee portion of the premium is typically compensation anyway. You as the employer are building that into their compensation in addition to your employer contribution. So as a result, I think it is reasonable to interpret this aspect of payroll costs to include both employer and employee contributions for health benefits. So that's my clarification that I think is appropriate. Cost of leave, should you have paid leave to your employees over, let's say, 2019, and the payment of state and local taxes assessed on the employee comp. So that is your payroll cost. That's the bucket of money that you must look at when determining your maximum amount. And I'll also say this before I go to the next slide. This 100,000 limitation that you see up top in the salary, wages, and comp. There's been a lot of confusion of whether this $100 limitation applies to all of the other payroll costs that are below it. The health benefits, the retirement benefits, the leave, et cetera. And by the way, on the retirement, I think it's just employer contributions, not employee contributions. I think it's just employer contributions. I compare that to health, where you do include employee or an employee. That's at least my interpretation. But you do not limit the 100,000, or you do not apply the $100,000 limit to all of the other payroll costs. You only apply it to salary. So go ahead and go to the next slide for me, please, because this really should crystallize everything for you. Sorry, there's some small words there, but bear with me as I tick through each of it, of which I will. So having said all of that, of which probably stuff that you've heard other people say and you kind of know, how do you actually calculate your loan? And I hope that this is where I'm providing the clarification you're looking for. When it comes to salaries, wages, and commissions, it is gross pay. So that would include the employee's FICA taxes and withheld taxes. Again, this is gross pay. Now, early on, there was question as to whether you do exclude employee FICA and withheld. I actually received a number of questions, and at first I answered that you don't include employee FICA, but I was really, at the time when I was answering this question, thinking of the employer share of FICA, and therefore saying you cannot include that. We have fortunately gotten some clarification from the Small Business Administration and Treasury, which kind of clarified it even in my mind, because I knew it was gross pay, but I needed to figure out the right words to explain it, and the right words to explain it is what you see here. It is gross salary, and you do indeed include FICA taxes and employee taxes withheld for the employee, because again, this is gross pay. But what that does mean is that you do not include the employer share of FICA. So don't do it. And there is specific language that I can point to that again, SBA and Treasury clarified, which then made me feel more comfortable when I was saying what I was saying, but I was mushing these two together. So to be clear for people who may have asked me the question, who might be on the phone, or people who've been having questions about this, it is gross salary, include the employee taxes. You do not include the employer share of FICA. What do you also not include? This is something, another question that I have received often. You do not include compensation paid to independent contractors, 1099 workers. It's employees, they're W-2 employees. If they're not W-2 employees, you do not include the amount you're paying them in your payroll costs. And fortunately, SBA and Treasury came out and clarified this question for us too. So we know for a fact, I had been saying previously that you can't do this. And again, Treasury and SBA clarified that for us. So again, the last sub-bullet here under salary, gross salary, et cetera, is you reduce all of these amounts for employees in excess of $100,000. So that's just a math equation. So going back to our list here, cash tip equivalents, your employee-employer contributions, and I'm going to stop here. Well, I'll go through and then I'm going to come back. Employer contribution for retirement, cost of leave, payment of state and local taxes, that's on the employee comp. Again, that's your calculation, right? So going back up to the health benefits, I've also been receiving a lot of questions from self-insured employers as to whether they can include health claims in their health benefit piece of this payroll cost. Now, I recognize that 99.9% of you, if not 100% of you on the call right now, are purchasing a fully insured plan, so this kind of question is not applicable to you, but I at least want to throw out there that I've been getting questions from self-insured. They've been saying, hey, we want to include health claim payments in our payroll costs, and I'm like, come on, man, you can't do that. That's a little bit of double dipping. It's the sticker price of the cost of benefits, just like a fully insured plan, which as stated is employer-employee contributions. So let's go to the bottom here. You add up all of this stuff. You simply divide by 12, again, assuming that we're talking about a 2019 employer who was in business throughout the year, and you multiply by 2.5. That's it. Now, if you were in a business that was not in existence last year and you're using this January 1, 2020 to February 29, 2020, you just add up the average monthly cost over those 3 months. You just add up the cost and you divide by 3 or 2 or whatever 2, because it's 2 months. If you're a seasonal employee, there's a specific calculation for you where you look at a snapshot of 2019. If you were in business then, and you look at like March 1 to June 30th, you take that average payroll, you divide by whatever months that is, and you multiply that by 2.5. And that's your calculation. That is your maximum loan. Gross salary doesn't include employer share of FICA. You do not include comp for independent contractors. You reduce that amount by 100,000 or by the amounts in excess of 100,000, and that's it. Then your next kind of accounting item or input, cash tip equivalents if applicable, employer-employee contributions, employer retirement contributions if applicable, cost of leave, payment of state and local. Again, you do not reduce those or limit those somehow by 100,000. Add up all of those costs, divide by 12, multiply by 2.5. Go to the next slide for me, please. So self-employed, like I said, bear with me, and you're a little bit of an easier discussion here as well. If you were in business in 2019, your maximum loan amount is the amount of compensation that you generated for yourself during 2019, limited to 100,000. You divide that by 12, and you multiply that by 2.5. So at the end of the day, you are eligible for a $20,833 loan, period. Next slide, please. Again, if you were not operating in 2019, you look at this January 1 to February 29 snapshot, up to 100,000, divide by, I said divided by 12, you divide by 2, because obviously it's a monthly average. You times that by 2.5, and in my opinion, actually, that's probably the wrong calculation because it's 2 months. Let me now think about that. Because I'm not good at math. That's why I went to law school. Anyway, that's probably the wrong number. But needless to say, I think you understand the calculation. So I trust that you will be able to get it. If you ask me a question, hopefully my mind will work fast enough to figure out the math there. My apologies on that. So I'll say one last thing about self-employed, and then we'll move on. Unlike businesses, you cannot include costs for insurance. You cannot include other costs for like retirement that you contribute to your own plans for yourself. The statute is clear that payroll costs for self-employed is only the comp that you generated for yourself. And that's it. And that's the calculation. Or that's the payroll cost that you then put into this calculation. Again, let me try to fix this last one in a little bit. But generally speaking, I think most probably were in business 2019, so you're following me. For those that aren't, follow up with me. Next slide, please. So other things that you do need to know, and you may know this after having looked at the application that is now out there, is you must certify that due to the current economic conditions, you needed the loan. You must acknowledge that you will use the loan to retain your workers. We're going to get to this mortgage payment, lease payment, and utility payments in a little bit, but you know you need to acknowledge certain things. Fortunately, you don't have to show that you have credit elsewhere and or there are no fees for applying for the loan. Go ahead and go to the next slide for me, please. So last comment on the Paycheck Protection Program, and it's kind of related to what I said above. You know, the federal government and Congress recognize that things have not gone smoothly over the past week. So for those of you who tried to apply, those businesses who tried to apply April 3rd, you may still be trying to apply, and or maybe you applied, but you're going back and forth with your bank because the bank didn't have clarification. They told you that. They're being overly conservative. They're afraid that they're going to lose money because there's not going to be enough money in this program, you know, et cetera, et cetera. The challenges that you have been facing, should you have been already facing them, federal government and Congress knows, and they're trying to fix it. And that's why you've seen the feds, as you see here in my second bullet, issue guidance to try to help banks understand this and help you, the borrower, understand this. I'll also note that Congress is talking about adding $250 billion more to the $350 billion that's already there. And sadly, Congress, or the House, Democrats and Republicans are playing politics yet again. Today, in truth, today, Senate leader the leader McConnell in the Senate said, we're going to add $250 billion to the small business loan, and we're going to pass this by a voice vote. And because no one's here, everyone's at home because of the shelter-in-place orders, et cetera, and we're going to get this done. Well, some Democrats are objecting, and I'm not just focusing on Democrats because some Republicans don't want to do it either, so it's kind of on both sides. And the fact of the matter is, we're supposed to get $250 billion today, and we may not because of politics. And I know I'm venting, but I think that everyone feels me on that venting because politics has really slowed a lot of this down. But again, know that I think in time, which kind of gets to one of my bullets here, that everything will work itself out, and you guys will get your money. I recognize that it might be too late for some of you, but if you can hang on, do it. And try to hang on, because I really do truly in my heart of hearts, I wouldn't be saying this if I didn't think of it in my heart of hearts, that you will get your money. It will work itself out. I also recognize that the loan amount may not be enough. Congress generally believes that it's not enough too, so we will likely see a fourth and fifth stimulus package, fourth and or fifth stimulus package, and we're likely to see additional relief. Direct payments, grants, loans, so just stay on the lookout for that stuff. Even though I recognize you're struggling right now. Go ahead and go to the next slide for me, please. We're going to now pivot to the loan forgiveness program. I am going to try to get through this a little quickly so I can, again, address questions. But I do want to go through the loan forgiveness program because it's super, super important. So in general, all or portion of the loan provided to the Paycheck Protection Program may be 100% forgiven. Again, this is just the Paycheck Protection or the Paycheck Protection Program, 100% forgiven, meaning you don't got to repay the loan to the bank, provided you fit within the forgivable portion, which we're going to go over. And this is obviously great because you don't got to pay the loan. Federal government's covering your costs. Go ahead and go to the next slide for me, please. So what loan amounts can be forgiven? This is, again, really the most important piece. Again, it is payroll costs. Again, for businesses, what is payroll costs? salary, wages, commissions paid to your W-2 employees, limited to the first 100,000. Now, here's also a very important point to make, clarification to make, that the salary was gross for determining your loan amount. When it comes to getting the loan forgiven, this amount would be reduced by the employee's FICA and taxes withheld. And now, why is that? Well, the government kind of doesn't want to pay itself, so it's giving you money. It's wanting you to provide that to your workers. You're going to pay your workers whatever the amount of money you would otherwise owe them, less the taxes, and you're going to be paying the taxes over to the government, which to a certain degree was already built in to your loan in the first place. So you do have to reduce employee FICA and taxes withheld during the loan forgiveness process, not for the loan application process. Again, cash tip equivalent, if applicable, employer-employee contribution for health benefits, retirement, cost of leave. Now, there is another reduction if you did happen to get a tax credit because you provided emergency paid sick leave or FMLA leave to your employees. You would reduce the loan forgiveness amount there. You know, as you may know, paid sick leave and FMLA leave does apply to small employers, even those that are 50 and fewer. So if your people go out on paid leave or FMLA leave for the permitted reasons under the statute, you must pay. And then the federal government is giving you 100% tax credits for it. And obviously, they're not going to want you to double dip. That's why this is here. In some cases, it might never be applicable to you because maybe you're never doing this. So, but know that it's a reduction. Obviously, you've got the state taxes too. Now, the other aspects of the loan forgiveness. What can you use the loan for? Mortgage interest on mortgages in place as of February 15, 2020, rent on leases in place as of February 15, 2020, and utility payments. So obviously, mortgage interest, rent, and utility payments weren't part of your maximum loan calculation because that's not part of your payroll costs. That's the cost of doing business, of course, but it's not your payroll costs. But because it is the cost of doing business, Congress recognized that. So it said, hey, like I said at the beginning of our conversation here, we want you to rehire your employees. So we want you to use the loan for the payroll costs. But we understand there's costs of doing business here, mortgage interest, rent, utilities. You can use the loan amount on that. Now, sticking with this for one last statement here. You may have heard, and actually the SBA and Treasury Department have come out with a clarification on this, that arbitrarily, mind you, the federal government has said, we're going to limit the amount of the loan forgiveness to 25% of your costs to non-payroll costs. So in other words, you will get a haircut, or I interpret this as you will get a haircut on your loan forgiveness should you use all of it for mortgage interest, rent, or utility payments. And why did the federal government come out with this clarification? Because again, they want you to use this money for your employees. They want you to use it to rehire people. Whether you agree or disagree with that, that's the intent. So know that the rule is now for loan forgiveness, you can forgive basically 75% of your loan, provided that's for payroll costs, and you can only forgive about 25% of your loan should it be for these non-payroll costs. Again, giving you the example I would argue is if you used your loan amount just for mortgage interest and payment, you're only going to get 25% of that forgiven. And then you're going to have to repay the remaining balance. Go to the next slide for me, please. So here's another important piece of information on the loan program, which has caused a lot of confusion, including confusion for me. The loan program under the statute had said there's an 8-week period where the amount of monies that you expend can be forgiven. Well, 8 weeks is less than the February 15th to June 30th window. So what gives? You're giving me this window of time to apply for a loan that's more than 8 weeks, really it's 4.5 months, and you're now limiting me to 8 weeks? Well, that's what they're saying. So you're limited to 8 weeks. Now, to an extent, that's I can do math there. It's two months. What I was confused about initially is, what do you mean by 8-week period? When does it start? The statute said the 8-week period starts when you get your loan, the origination date of the loan. But I said to myself, well, shoot, if I'm getting a loan on June 15th, I mean, maybe none of you are going to get a loan on June 15th, but let's just say you did. And I have 8 weeks post June 15, and you're telling me I'm stuck. I'm limited to this February 15 to June 30 window. Well, that doesn't quite make sense. So I was suggesting, because I saw a Senate staffer summary that said you can pick the 8-week period out of the February 15th to June 30 timeframe, that whatever you want to pick. And that's how you apply your 8-week period. Well, the federal government has come out with guidance that clarifies now that it is the 8-week period that starts when you get your loan, and that 8-week period can go past June 30th. You just need to apply for your loan by June 30th. So again, it's the 8-week period when you get your loan. And to me, that means that you can't go back to February 15th and pay your rent or pay your mortgage or pay whatever. That's frustrating, but I think that's what this means. And again, it also makes sense with the underlying intent here of you rehiring your employees. They're saying, look, if you get a loan on April 10th, from April 10th, you get an 8-week period going forward. And on April 11th, federal government wants you to rehire your employees. Whether you're going to do that or not, it's a different conversation to have, but I'm just telling you that's what they want, and that's what the 8-week period means. Going to go to the next slide for me, please. Now, when can I apply? Many of you already know this. April 3rd, if you were a business, nonprofit, or sole proprietorship, in my opinion, like an LLC. Starting April 10th, if you're an independent contractor, if you're a self-employed individual that's just organized differently than a sole proprietorship, which you can also be an LLC, you can now apply April 10th, which is basically tomorrow. So almost this slide is, it's moot because you guys are already on it. Go to the next slide for me, please. So what do you need to do for loan forgiveness? This, again, is a very important piece of information for you to know. Now, granted, you're not going to get your loan or apply for loan forgiveness until after the 8-week period. So you have a little bit of time to figure out what you need for loan forgiveness. But I'm going to tell you here, and we'll keep talking about it going forward. You do need documents to verify, the number of your employees, the payroll, pay rates, including payroll tax filings report to the IRS, et cetera. Also, cancel checks, verifying mortgage interest, lease, and utility payments. Basically, the government wants to make sure that you spent this on the amount, the things they wanted you to spend money on. Now, I'll stop here for a second on this documentation because, as many are experiencing and will know, because I mentioned it too, that banks are asking for certain documentation for purposes of the calculation of the loan. So they're asking for documentation for calculating the loan, not so much forgiveness, but just calculating the loan. Now, Treasury has come out and said, hey, banks, you can be somewhat lenient when it comes to the documentation that you would rely on, or that you will rely on, for determining the maximum loan amount. There is a self-attestation, there's a penalty of perjury, so the federal government is hoping that you come with good faith with what you think your costs are, and based on that, the government is saying to the banks, more or less, let these guys self-attest to what their payroll costs are. Yes, you might have some internal procedures and processes that you're going to want some documentation. You should want some of that documentation. If some of that documentation is from a reputable third party, like a known quantity, like an ADP or another PEO out there, that the government knows about, that's going to help speed up the process for getting the loan in the first place. But I would argue, and I say that to then get back to this, I would argue that the banks are going to be a little more specific in what they need and want. I think the government is going to want the banks to be more specific in what they should get to determine loan forgiveness. So know that on the front end, you might have some self-attestation that you might be getting some flexibility on and for, excuse me, but on the back end, excuse me, but you might not be able to have that same flexibility. And again, you must certify. So go to the next slide for me, please. How do I apply? You know, a lot of you already know this. There's an application. You can submit it directly to your lending bank. No need to go through SBA. Many banks, I think the majority of them, if not all of them, have created their own application form, which is allowed. It's typically online just because that's the world we live in. You know, basically, most of the banks out there are FDIC banks, so therefore most banks are doing this. Some banks are better equipped at this than others. I know from a challenge perspective, because I've been reading this just like you have, if not you've experienced it, some banks are limiting, you know, borrowers to ones that have been existing relationships with them. Congress is not happy about that. They're trying to change that as the federal government. So they're trying to direct the banks that they shouldn't, couldn't, and they're going to get penalized if they do something like that. So hopefully that helps a little bit with opening this up a little bit. Actually, go to the next slide. Maybe this also gets to some stuff about just other changes. Just look at my second bullet. I think I mentioned, you know, the Federal Reserve announced the creation of a new facility to purchase loans made by banks. This was intended to help those cash-strapped banks out there, those community banks, you know, that don't typically have a lot of money on hand, aren't used to big loans, aren't used to multiple small businesses asking for loans. But we all recognize, and the federal government recognizes that community banks are the backbone of our economy here. And so they need to help Main Street. And so the federal government is doing everything they can to help get this money flowing. Just back on this other change you see on the first bullet there, originally the statute said that for amounts that were not forgiven, right? So back to almost my mortgage and utility and rent example. You got only 25% of it forgiven and the rest of the loan, you know, is not forgiven. You got to pay that back. And the statute said you can pay it back over 10 years at a 4% interest rate. Treasury came out and is now saying that the amounts must be paid back within 2 years at a 1% interest rate. So that is a change from the statute. Again, look for changes coming from Congress in the next couple months on the fourth and possibly fifth stimulus package that might provide you more relief than what you're seeing here. So with that, I'm going to stop. I'm going to answer some questions, both that Chris Delaney might get. I know there's a bunch of questions that came in with chats. I'll offer this first. I've gotten some questions based on my conversation I've had previously. When it comes to self-employed, I want to let you know that you can get unemployment as well as getting the loan. And why do I think that? Because if you're self-employed and you're not generating any money, you are essentially unemployed. And you can't use your loan to really pay yourself because you're not generating any compensation. But you were in business, let's say in 2019, and therefore you did have compensation. Therefore you did have a monthly payroll amount that you can divide by 12 and you can multiply by 2.5 and you can get the loan. And I think you can use the loan for forgivable amounts on mortgage, rent, and utilities. I think so. Now maybe you get a haircut based on the 25% non-payroll limitation that I mentioned to you, but I think you can get unemployment as well as get the Paycheck Protection Loan, provided you can prove that you are indeed unemployed. So that's a question I've gotten from self-employed. You know, again, 1099 workers, you cannot include in the payroll calculation if you're a business, and the reason why, and this was part of Treasury and SBA's clarification, was because 1099 workers can get a loan on their own. So therefore, you can't double it up in that regard. So hopefully that answers some question there. I guess another question relating to unemployment. Let's say you're a business, and let's say you laid off your employees, and let's say they're on unemployment right now. Well, if you rehired them, they would obviously not be they would not be unemployed anymore, and therefore they could not get unemployment. Now, if you burned through your loan over the 8-week period, and then you had to lay them off again, I think they would be eligible for unemployment again. And unemployment goes all the way through the end of the year. So I think a business, I mean, obviously you can't double dip. So your employees, if you rehire them, they can't be also on unemployment. I mean, that's obviously between them and the government. But the point that you should know is if you laid them off, you can rehire them. If you rehire them, then they're not eligible for unemployment. If you lay them off again, they're eligible for unemployment. Okay, what other questions are we getting from some people here? Does the rehire need to be the same person, or can it be limited? No, I think that you can hire someone else. There are some rules relating to kind of how you're replacing the employees. So let me try to see if I can answer that. I'm not going to be able to answer that here. I apologize. Here's another question. If I'm a startup, my first payroll was in March 2020. Am I eligible to apply? Now, I did see some clarifying guidance on this question, and I'm not going to answer it here because I can't remember it, and I don't have that guidance at the tip of my fingers. So why don't you email me, and I'll try to answer it for you, because I know it's out there. I know there's an answer, and it might be favorable to you. It might be not favorable to you. I know there's an answer on it. I just sadly don't know it now. I apologize.
Hey, Chris, I got a question from the chat in regards to banks. So if my personal bank doesn't process these loans, how do I find a bank that will?
Tough question. Just keep looking around. I mean, the SBA has a list on SBA.gov. You know, you might have to go through a couple clicks to find a list of the banks that are approved. But in my opinion, you can just short circuit that by going to just whatever bank you can go to, because most of them are going to be eligible here. And I would just keep trying different banks. That's my advice. You know, one, go to the SBA list, but also just go to different banks, because most of them are going to be eligible here. Now, again, I got some questions here in the chat, and I hope that I've answered this question. If you're self-employed, I do not think that your SEP IRA contributions can be included in your comp, your payroll costs. I just don't. The statute to me is clear. Payroll costs for businesses spell out all of these other costs, but they're specific to self-employed and just as compensation generated. So I do not think that you can do it. I have had a question on if you're self-employed and you run it through some of your family. I would go so far as to say that if your family members are W-2 employees and you're paying them, I think those are W-2 employees, and you include that in your payroll costs. I mean, I almost consider you a business in that regard. So that's my answer there. And if you need follow-up clarification, let me know. So I got another question of, I looked at the Bank of America website and 1099 comp is included there. Now, why I think that's the case, and this is, again, generated the confusion of why I wanted to hone on this. I think the Bank of America application has that 1099 worker there for a 1099 worker. So if you're a business, you do not fill out that line on the application. If you are a 1099 worker, you do fill it out. So in other words, if you're a business, you fill out all the lines except for the sole prop. If you're a sole prop, you fill out the only line, which is the 1099. So what Bank of America should do is they should have a question at the beginning of their online service to you to say, are you an independent contractor or are you a business? And once you click on each of those doorways, it should bring you to an application that provides you the right answer. Again, I'm telling you, 1099, this is what the government's telling us, that 1099, if you're a business, you do not include that, even though that might be on some of the forms. Oh, what do you got? What do you got there, Chris, as I'm looking through this? So if I'm an LLC partnership with no employees, I consider you like a sole proprietorship. If you don't have any employees, you basically go on your comp. Yeah, there's a lot of questions I get about, like, you know, because you could be organized as an S corp and you can pay yourself. I just really think that whatever the amount of money that your business is generating, plus the revenue that you're paying yourself, should be countable. That's my opinion, because to me that just makes sense. I mean, you're just organized in a different way for tax purposes. But the fact of the matter is, you're a worker who is generating money based on your work, and I think you would include it. That's my opinion. Maybe a bank's going to tell you something different, but I think if you're an S corp and you have money for your business that's kind of profit, and that you are paying a small salary to yourself, I would go for it, and I would include all of it. I just think that seems logical to me. And if you're told differently, I'm sorry I told you the wrong thing, but this is an area of confusion, but that's what I think, just to at least try to help you there. Can we apply to multiple banks for the PPP loan? And I wanted to get to this. You cannot apply for multiple loans. You can only apply for one PPP loan. So that means that you can't go to bank one and then tomorrow go to bank two, assuming for a moment that bank one is going to give you their loan and then bank two is going to give you the loan. Can't do it. Now, could you apply to bank one hoping that they got their stuff together and give you a loan in short order, and while you're waiting for bank one to get their stuff together, you go to bank two to get a loan? I don't see a prohibition against that, but that just mucks up the system and the process, and you might end up double dipping, because bank one might give you a loan before you know that you applied to bank two. So, I mean, my advice would be don't do it. But I get the fact that you want your money, and if it's arbitraging here, or playing arbitrage by going to multiple banks and seeing who comes to you first, you know, shoot, you can do it. I don't see a prohibition against that. Back to this, you can only apply for one loan. Like, if you own multiple businesses, in my opinion, you do not get a loan for each of those businesses. Instead, you aggregate all of the costs associated for all of those businesses, and that's what you treat it as one single employer, and you put it into the calculation based on how I explained. You put it into the calculation. You don't get two loans.
Hey, Chris, I got one question for you.
Sure.
If you're deemed an essential business and you have not laid anyone off, are you eligible for any of these loans?
Yes. Yeah. I don't see why, because to me, that goes to the second underlying purpose here, which is they want you to stay in business and they want you to keep those people employed. So for sure, I would say that you are eligible for the loan. And again, let's say you're essential and you're operating right now, but let's say you were operating last year. Therefore, you fall into a business that was operating in 2019, and you do the whole calculation that I mentioned based on your 2019 average monthly payroll cost, divided by 12, multiply it by 2.5, that's your amount. So yes, you can do it. And I hope, thank you for being essential, and thank you for staying in business. I know it's frustrating, and I hope that the loan helps you. So, you know, another person asked just date on application, like I'm an independent contractor. I heard that the 10th is, where can you get the application? Well, I hope I provided it in my slide here. You can just go to banks too. They'll have their own application probably. So that's how you get it. Yeah, so someone doesn't have an existing relationship with a bank. Who do I apply the loan for? Yes, you know, we've been hearing that banks are shunning those that don't have the relationship. Congress is mad about that, and the federal government is mad about that, so they're trying to tell the banks to stop it. That's not to say that the banks are going to stop it. So all you got to do is just go to different banks, and maybe this goes to the multiple loan or bank question. Or questions, plural. You just got to go to as many banks as you can to see if they're going to say yes to you. Now, the caveat to that is I wouldn't go to every multiple bank and go through the application process because, again, you might get multiple loans, and that's not how things are intended. But again, I get it. You want the money, and the best way for you to get it is to go to multiple banks asking them for the loan. But I would ask them, and once they say yes, then go through the application process. My thoughts there. Again, just getting a lot of 1099 questions. I hope I've generally answered them. Oh, what is this? Yeah, people are saying this implies you should include. I'm telling you, based on the guidance that I have just read from the federal government, and I can try to get my hands on it and email it to you if you really need that firm confirmation. But the federal government has said you do not include money you paid for 1099s in your payroll costs, even though the application says it. And that's, again, what I think is why things are so confusing here. You know, people changing part-time to full-time over the course of the year. I think, again, if, let's say, 3 months out of 2019, people were part-time, then the next 3 months were full-time, then the next 3 months were part-time, the next 3 months were full-time, you just count up what your payroll cost for that month was, whether people were part-time or full-time. You add up those costs, you divide it by 12, and that's your monthly payroll cost. That's my opinion. That's how you deal, in my opinion, with fluctuation of people going from full-time to part-time. It's almost like a full-time equivalent count. You just look at all the hours that people are working. You're looking at all the money that you're paying these people for those hours that they're working, whether they're full-time or part-time, and that's your payroll cost. When's the latest you can rehire for forgiveness portion? That's a good question. I think the 8-week period. So let's say, again, I got a loan on June 15th. My 8-week period starts then. So therefore, my 8-week period goes past July 15th and into August. If I rehire someone August 1, I think you can use the loan to pay for that rehire and ask for forgiveness for the comp you're paying that rehire. So that's my thought there. Should we include mortgage, interest, utility payment in the amount of the loan? No. No. The amount of the loan calculation is what you saw in my earlier slide, which is just really, at the end of the day, think of it as compensation. It's really compensation that you should be thinking about, not cost of doing business, for purposes of determining the maximum loan amount. When it comes to the loan forgiveness, you are allowed to use it on those costs of doing business. But again, know that the government has now come out and clarified that there's a haircut that they're going to impose on paying on that non-payroll stuff. So, Chris, do you have a question to close it out because we're running close to the end of time and I got to jump too. Or if you don't have a question, I'll turn it back to Jeff. You can close us out and I'll try to answer questions as people send them to me.
Yeah, I think that makes sense, Chris. So thank you, Chris. We've received a lot of questions, and we're going to do our best to answer them and post them on hsainsurance.com. When you go to our website, click the Need Help link in the top right corner, and there you will find a COVID-19 section, and you can go through that, look at our FAQs, look at the application for the PPP loan, as well as a number of hopefully helpful bits of information. I cannot imagine a more difficult time as a sole prop or a small business owner. Our role is to try to help you and your broker manage your benefits in the best way possible, and hopefully this webinar helped. On behalf of HSA Insurance, I really appreciate your time. Thank you, stay well, and have a great rest of the day.
Thanks, everyone. Take care. We'll talk soon.